ahead of the ECB meeting. Let's get more on his thoughts about that with Nick Twidale. He's from FP Markets. Nick, welcome along.
Thank you very much, mate.
Good to hear. Okay, so really interesting ECB meeting tonight. What are your thoughts? Because over the last 48 hours, we've got these journalists coming out with kind of these inside scoops that it could be a 50 basis point move. What's your sense? What do you think the market's implying? How could this impact the euro and the broader currency landscape?
I think there's a couple of things out today as well that are very key for us. We're ignoring the central bank double header of the BOJ.
Yeah.
Ignore that. We sort of know what's going to go on there. The ECB is very interesting. There's a little bit of a conspiracy theory that the ECB are using journalists now to sort of get their message out, and that's why there's that leaning towards that 50 basis point. But I think now it's out there, it won't come up as too much of a surprise, and we've almost seen the move in the currency. That was quite a sharp move from pretty much the low 101s all the way up to sort of 102.70 just the last couple of days. So, and then we've sort of had a rejig, and we're back down around 101.80. So I think if we do get 50, it does give a little bit of underlying support to the euro, but I think there's the risks are still far exceeded to the downside. And I think we've got to look at gas supplies, we've got to look at the impact of the Ukraine-Russian conflict, which I suppose links in with that gas supply. And I think that's going to, in the more medium term, that's going to dominate the direction of the euro rather than what we get from the ECB tonight. So it is a big meeting, and I think that could have a much more medium term effect. But short term, I think we're still looking at those headlines and what's going to happen with that Nord Stream 1.
Yeah, I know that Scuddy in his opinion piece the other day teed off on the communications decisions of the ECB.
I'd say I probably got it from him, didn't I? But I had heard from a few people in the media as well, and it was like, go with that. So it's a little bit, he backed up what I'd heard from a couple of media sources as well. So.
Yeah, it doesn't fill you with much confidence. But I mean, just on that as well, clearly you just said that the kind of structural issues that the European economy, or the Eurozone, is now facing, which is mostly around energy markets, is going to be the big driver of where the currency goes in the long term. And that clearly at the moment is, to the downside and the trends to the downside. Do you think any of this business about the anti-fragmentation tool and the buying of peripheral debt will have much of an effect on the currency, or is this going to be more just a wonky start for the banks to worry about?
I think it's more going to be for the banks to worry about, and I think short term we're going to skip over that relatively quickly. I think longer term it could be something that comes into us, and I think you hit upon another couple of key things that will affect the euro. Is we're starting to see those signs of political unrest. Obviously Italy's probably front and centre of our mind at the moment, and none of that's ever going to be good for the single currency. So, once again, I see the risks to the downside outweighing anything that we might get from a 50 basis point hike tonight. Whether it comes or not, I think I'm probably leaning towards us getting it. And it's almost a knee-jerk reaction that gives us another rally to sell into.
Yeah, and I suppose I'm not too sure if you've got any information on positioning at the moment, but I'm sure that the market's still pretty long dollar, right?
Yeah, it is. Yeah. So it's because it's had this nice move. I think people are still fairly happy to keep those positions on while we're at these lower levels, and I think we're looking for that continuation and another breakthrough parity and take us down through that low that we're probably looking at around about 99.50.
Yeah, okay. Let's get to the Aussie as well, because we haven't had that much data and that much news out tonight at the last few days, albeit we don't really seem to be trading that much on local data anyway. But how's the Aussie faring for you at the moment? Because a few weeks ago we were talking about the risks of going through 67 while we're here and floating around it. Another one that's sort of skewed to the downside when it comes to the risks?
I think so, yeah. And I think it's still a big dollar story really for the Aussie and for most of the majors. Same sort of thing, and I think the Aussie's traded very well. And once again, we were talking about those big options positions that come in at pretty much every big figure in the Aussie. It's trading really well around those. You get that sort of 2080 sort of revolving around the big figures, and then it moves with that big dollar move. So it's tracked back nicely, and you can see from that chart there, it's sort of tracked back nicely to the level it broke down. I think this is probably the daily chart, and it's just stopped where that former support line was. We're sitting just underneath 69 cents. I think in line with what we're going to see in the euro and what we're seeing sort of from the Australian economy relative to the US economy, we've probably got a little bit more downside for the Aussie.
Yeah, totally. Another really interesting one is gold at the moment, because we've got a few things to go through, but gold next. Back through $1,700 per ounce last night, and if I'm not mistaken, I think that was the first time since April 2021, I should say, that's happened. that's got to be ominous, right?
Yeah, I think so. And I think the nice thing about gold is it's actually not flying, but it is gradually moving down. And I suppose we're seeing some pretty harsh moves in the currencies and some of the other commodities, and gold's actually sort of grinding lower. But it has broken some key support levels, and it's traded really nicely from a technical perspective. But I've taken the line off, but there were lows around 1700, like all the way back, like Q1 21, Q2 21. And breaking through that, I think, is fairly significant, and I think the market's going to start to turn even more bearish. Once again, it's another big dollar trade, and we're seeing less of that gold correlation with risk than we used to see traditionally in the past. So.
Yeah, let's move on to the yen, because this one's fascinating. One, because we've got the BOJ today. There's not necessarily much that we're expected to gain from that, even though we feel like that maybe there should be a little bit more done on certain elements of their policy suite. But we've kind of seemingly slowed upside momentum. We got to 139 very briefly before pulling back.
Yep.
How do you see things there, and what do you think the drivers will be there for the yen?
I think we're going to see a little bit more of the same, and I think the chart will come out. Yeah, and I mean it's really respected that sort of last trend line. I think it will continue to grind higher, but we have had such a big move in the dollar yen and some of the yen crosses that we're going to see a little bit of profit taking from the speculative market out there, and I think it will continue to grind, but I don't see any massive steps higher. We need a fundamental change. We probably need something from the Fed or some sort of change. You know, maybe it does come from some geopolitical. Maybe it is, you know, the Ukraine-Russia war, probably not directly linked with the dollar yen, but that will have an effect on all currency markets, and something that will maybe see the dollar come off a bit, and that's when we get a little bit of pace in dollar yen. But for the moment, the domestic's not going to change. We're not going to see anything different from the BOJ. We're not really seeing too much different from the Fed, so interest rate differentials just point to more upside.